Today's discussion will be on definitions of disability insurance. Now, I want to stress that we are talking about disability, and therefore it has to be a situation where you have to have an income in order to replace. In other words, the definition of disability is really more income replacement insurance rather than just plain disability. So if you don't actually have an income to replace, you can't put in a claim because there is no loss. In other words, there has to be that loss. Now, that disability also has to be due to an accident or a sickness, okay? Once again, it can't be a self-inflicted wound. So if, for example, suicide attempts, things of that nature there, or criminal, attempts, things of that nature, they will not simply cover that. They have to be, in fact, accidental, in other words, external forces rather than you doing some severe damage, to yourself. Now, the definitions here, it has to be total disability. In other words, this is not a situation where you can do some work and not some work and so on. The first thing that in order to put in a claim is that, in fact, you have to be totally disabled. Now, there are three definitions of total disability which are very, very, very important, and these will definitely be on the exam. The first one, what we call is any occupation, or what they call any OC, basically. You look at any occupation, what it's basically saying is that if you've got $5,000, for example, disability. In other words, you're totally disabled right here, okay? You're getting $5,000 a month. Now you go back to work, and you can do anything at all, whatever it is. You earn whatever income. As far as the insurance company is concerned, you are now gainfully employed. And because you're gainfully employed, therefore, they will cease paying you that $5,000. So basically, with any occupation, you're either totally disabled or you're, in fact, rehabilitated and you're actually going back to work. There's nothing in between all of that at all. The next one is what we call regular occupation. In a regular occupation situation, what really happens here is that you can, in fact, go back to work. In other words, the insurance company will encourage you to go back, go back to work. However, because you cannot do your own regular work, in other words, you can't do the same work you were doing before, or perhaps you can't work the same amount of hours you were working before. In other words, you're still not making your full pension or your full amount of money that you're entitled to. Therefore, what will happen is the insurance company will continue to pay you the $5,000 minus whatever your employer is actually paying you. So if you went back to work and you're making $1,000 a month and you're entitled to $5,000, the insurance company will, in fact, pay you $4,000. Unlike the any occupation, which won't pay you anything at all, in this one here, they will, in fact, still continue to get your $5,000, except you're going to get it from two different sources, okay? The last one is own occupation. In an own occupation situation, you in fact cannot do your own work. So for example, if you were a surgeon, if you were a doctor, if you're a dentist, and you have some kind of an injury and therefore are unable to continue your dental practice or continue to be a surgeon, but you can teach, you can do some other work, they will continue to pay you that $5,000 regardless because you are not doing your actual fact, your own occupation is very important. So you can do other work, but you cannot do your own work. So as far as the insurance company is concerned, you're still totally disabled. Now let's talk about these definitions of disability. The first one is residual. Residual basically essentially says you're on disability insurance now, you're getting your $5,000 a month, okay? Now, because you have a residual definition of disability, what the insurance company is going to say is, okay, how much money were you making before you became disabled? How much money are you making now? So, for example, if you were making $10,000 a month before you became disabled, and now you went back to work and you're only making $5,000 a month, therefore, 10 minus 5,000 divided by 10,000, in other words, you're still losing 50% of your income. So therefore, they will continue to pay you 50% of that $5,000 benefit, okay? So it's how much salary were you getting before you became disabled, how much salary you're getting now, whatever that percentage loss is, they will continue to pay you that particular percentage loss, okay? Partial disability, very, very similar to residual, except here what we're asking is, how many hours were you working before you became disabled? How many hours are you working now? So once again, if you were working 60 hours before, and now you're only working 30 hours, you still have a 50% loss, so therefore they will continue to pay you 50% of that particular benefit. The last one is what we call presumptive disability. the word presumptive is really important because it is presumed that you will never actually recover from your disability. So here it's really a tragic situation that you've lost your two limbs, an arm, a leg, your eyesight, your hearing, your ability to speak. In other words, these are unrecoverable. You're not going to get any better here. So therefore, it is presumed that you will never actually recover. So as a result, you will continue to get that benefit for as long as the benefit period actually lasts. So if you had a 2-year benefit, they'll pay you for 2 years. If you had a benefit to age 65, they'll just continue on paying you till age 65 because it's presumed that you will never, in fact, recover from that particular disability.